Every economy begins quietly. In workshops, in farms, in ideas that start small enough to be ignored.
The smaller businesses of today must be supported and catalyzed to become the champions of our market and potentially an African champion in the decade.
We have the most youthful people in the world. If you look at the aggregate ages between 18 and 25. Europe, the aggregate age ranging in the 40s. We also have a very educated population.
But potential alone doesn't build businesses. Between skill and scale lie daily constraints. Access, cost, uncertainty.
Era okusoma olwannema nanga ekyokola tewali kikolenne yatukolamu nze taata wange yali nga mubazi w'amaato kati obuzibu twafunamu nti emiti gyakendera embaawo zabuzibu embaawo tuba tukozesa zekongo ekongo tebakyava mbaawo kati omukolera eryato enamba nayo emyaka ebiri neryonooneka Omaaso ndabanga oguyinza okendeera bawatakuze lubaawo lwa Kongo kati olege abatakoze eryato.
From raw materials to finished goods, access shapes what's possible.
We started by making our shoes by hand in 2021. Now we have a more automated system of doing things. We make our shoes from leather. Value chain begins right from the farmer with the cow to the tannery that makes the leather, up to the craftsmen that make the shoes that still belong in this community, and we sell our shoes within our community. We have a huge capacity of about 4,000 pairs of shoes per day. Being able to sell beyond our borders is very important. Also being able to buy raw materials from the various countries within East Africa is also very important to us because it saves us our money.
Whether it's access to materials or access to markets, the challenges facing small businesses rarely stop at national borders. They are shaped by trade, finance, and policy.
We have everything that should enable us to transact and trade with each other. Because governments have sat down, they've developed policy. We have the East African Common Market System, we have the COMESA. But we're a bit far off because we also have non-tariff barriers. The non-tariff barriers have restricted the flow of goods and services between countries.
Most of our customers are Kenyans. We have supplied only once to Uganda. The process of supplying to Uganda was hectic because the cross-border tariffs wasn't as smooth as we expected it to be. So now trying to supply within Kenya with a capacity like ours means that sometimes we have dead stock. If we can expand our markets in the region, then we are able to serve more people.
When production outpaces the market, growth depends on what comes next. Access to new buyers, and the ability to move across borders.
We've seen quite a number of our banks here offering financial services within the region. As far as South Sudan, we have DRC, we have Burundi. Increasingly, we're finding that a lot of our financial sectors are seeing a lot of profits coming from the banking infrastructure in our neighboring countries.
We make these investments within Uganda. We buy Uganda bonds, we buy Uganda companies, but we also cross into Kenya. We cross into Tanzania. We cross into Rwanda because sometimes the opportunities in these markets allow us to make higher return for our members. We are funding startups. So somebody who had a small business before, now they hire people who have jobs. Now because they have jobs, they're making salary, now they can save with us. We have invested in 438 startups. Now that can be replicated across, and suddenly all the entire East African region begins to grow. And as it begins to grow, there are more and more opportunities for NSSF. which means our members get to benefit as we tap into those opportunities.
We have to find a way to work within our SMEs to give them support, give them the funding, give them the logistics that they need, and access to market. The operating environment is the biggest challenge for them to be able to thrive in their business.
Ebyo sako nitiza okuba nayo nti omwalo gw'egindi gavumenti yagwadde miliyoni 4 omwalo gw'egundi gavumenti yagwadde yingiri 15 avuge ng'akola ki ebintu byera kuno byafuuka byalomu so gavumenti singa tuyamba nekwata abaana ngabo betukozesa.
Our foundation brings in a partnership with the county government through the Ministry of Trade, through the Ministry of Investment, and saying how do we work with them and give them financing through the programs that we face. There is obviously a way of lending collectively as a bank and as a team. The way we work both the foundation and the bank is to curate the business ideas which are not bankable yet. This is the market where we must build a model of aggregating our capabilities, not just as Stanbic, but within the industry.
Across sectors, small businesses are doing more than just creating jobs. They are absorbing shocks from supply chains to borders and adapting in real time.
Economic diversification and trade. That is one way of us as a region developing resilience.
Small and medium enterprises carry much of the economy's momentum. But growth at scale requires more than resilience alone. It requires capital, partnerships, and access beyond borders.
FDI, just in 2024, I think we saw flows between Ethiopia, Uganda, Kenya, Tanzania, etc. of about 10 billion as well. There's loads of other data points showing that even investors have recognized that this is a force to be reckoned with. A GDP of 600 billion, which quite frankly is almost South Africa and Nigeria combined. It's a young population, it's growing, it's educated, it's monolithic in terms of its legislation. We must continue to play that role of bringing people together, bringing corporates together, and coming up with real solutions for East Africa.
Small and medium enterprises are already shaping the region's future. What they need now is scale, through capital, cross-border trade, and regional collaboration. Supporting SMEs is not just an economic decision. It is an investment in the resilience of East Africa.